Good afternoon, everyone, and welcome to today's webinar, Digital ID, Verification in Banking, Balancing Compliance and Customer Experience. I'm Roland Eichner, VP of Business Development and Sales for Digital Identity, Value Added and Trust Services at Groupe, and I'll be your moderator for the next hour. And today we are really thrilled to have you with us because identity verification has evolved dramatically from a back office compliance task to a strategic pillar for customer trust, fraud prevention, and digital innovation. So today's session is all about how banks can onboard customer seamlessly while staying ahead of fraud and meeting ever tightening regulatory requirements. Before we start, I would like to say a few words about Groupe and Keesing Technologies. Groupe stands for the forefront of digital identity, secure credentials, and trust services in Europe. We enable governments, financial institutions, and private organizations to implement compliance, scalable, and interoperable identity solutions. We are bridging physical and digital domain, whether it's national ID cards, passports, wallets, onboarding platform, or digital trust frameworks. Our technology delivers robust security, privacy protection, and regulatory compliance across every interaction. Talking about Keesing technology, Keesing technology is part of Groupe, specialized in identity verification and document authentication. The solution combined biometrics checks, document validation, and smart compliance workflows, helping banks onboard customers securely while meeting global regulatory standards. Joining me today are two fantastic experts from Keesing Technologies, Odette Lukovskaya, Compliance Manager, and Callum Burney, Head of Product. And let's give them a moment to introduce themselves. So let's start with Odette. Would you like to kick off and start?
Yes, thank you, Roland. So my name is Odette
you're on mute.
Lukovskaya. I am. Oh, you can hear me now?
Hear you fine.
Great. So thank you, Roland. My name is Odette Lukovskaya. I am the compliance manager here at Keesing Technologies, based in Amsterdam, the Netherlands. Here at Keesing, my focus is on the regulatory compliance and enterprise risk management frameworks. My background is in financial services and banking service providers. And actually, I started out in the first line as a risk and fraud analyst. So working with KYC tooling, carrying out the KYC verifications. So I have the experience as both a user of the KYC tooling and also the consumer from the customer side.
Thanks, Odette. I'll say a few quick words about myself. Callum Bunny. I'm responsible for product at Keesing.
But
I think Roland's having some challenges with his microphone there. Sorry. I'll continue. So I'm responsible for product at Keesing Technologies. My background is very largely identity, both physical documents and also digital identity. Been working in the industry now for some 30 years, which makes me about 1/3 as old as Keesing Technologies, which is sometimes a scary thought. But I'm very much involved in developing and driving product development for identity verification within Keesing and its product portfolio, but also as we look forward to telling you a little bit about it today, how Keesing and Groupe are broadening the scope of functionality and capabilities for identity verification to create what is effectively much more than compliance, but a very versatile set of integrated tools for identity verification based around physical documents, and then gradually as the world evolves into digital credentials. So thank you. Roland, I think you're on mute.
The problem is my microphone. Can you hear me now?
Yeah, perfect.
Okay, great. So let's start framing the challenge. By framing the challenge, Odette, from your compliance perspective, why is identity verification no longer just about compliance, ticking the regulatory box? What changed in terms of customer expectation and fraud risk?
Yeah, so it's a great question. I think identity verification as we know, identity verification, customer onboarding, and KYC, it supports the shift to a risk-based approach towards customer onboarding that we see is the development brought by the recent AML legislation, which we're going to get into a little bit further and talk more about. So not only does it support this from the regulatory standpoint, however, it is also an opportunity and a vehicle to build relationships with your customers. So it is about stepping away from viewing compliance as just a mandatory hurdle to a good customer onboarding flow or a blocker, but it's really viewing identity verification as an opportunity and an advantage. So you start building the relationship with your customer. Often customer onboarding identity verification is some of the first contact that they're going to have with you as a bank or a financial service provider. So it's the opportunity. You start building the relationship, you move towards good customer retention strategies, and it helps you create and build business value.
Great, thanks for that. And if we are talking now about smarter onboarding journey, Callum, let's dive deeper into product innovation. How does INID Verify use biometrics and real-time data to streamline verification? Can you walk us through how it's balanced speed, simplicity, and satisfaction?
Happily. I think it builds nicely on some of the things that Odette was saying, but from a technologist and a technical solutions perspective, it's very clear that the market has been trying to deploy for some time a number of silver bullets that can solve all onboarding problems with one simple fire from the gun, as it were. And I think the market has evolved to a point now where most customers, most organizations realize that that is never going to happen. That the effective solution, the smarter onboarding journey, is a diversified and potentially quite complex journey. So the challenges are around understanding the balance of technology, the management of the data, and the efficiency of the components that you can use. So that's a nice introduction to the concept of what INID Verify brings, because its particular strengths are based around mobile SDKs and the ability to allow the customer of the financial services organization to perform the essential steps of document capture, biometric verification of the document holder, and it focuses very much on the chip-based process for this, where there are a number of very trustworthy technology features which make remote identity verification procedures very trustworthy, very safe, very efficient, and given the nature of chips being digital, also quick. But as most of us have discovered over the last few years, that was a big dream, and it was never going to solve all possible cases of onboarding. So it is, if you like, the big component with which you can start to capture a large number of customers. I'm going to slip into a little bit of another slide here and just give you a sense of what lies behind that type of technology in INID Verify. It's designed for mobile, it's designed for capturing MRZ, it also performs liveness checks, clone detection on the chips. It includes within the back end open banking integration, which allows for the possibility of doing name and ID based checks through existing banking footprints. And also fits with current regulatory requirements around European onboarding for qualified electronic signature or qualified trust service provider services. Equally, being a front-end technology, it's not the whole story. There are a number of back-end components which are very important for the performance of this very useful mobile function. These include the provisioning of all the necessary PKI certificates in order to fully validate the data that comes from the RFID chip, typically in passports. But as I imagine most of you know, for example, in Europe, the passport chip concept is now a part of the electronic identity card concept. So the concept of doing this is extremely extensible in terms of biometric authentication of the holder as well as of the document data. This concept is based on white light data validation. So as you know, mobile devices only capture visible spectrum light, but also the data can be pushed out the back end using various tools and APIs within Keesing to check on personal footprints, risk management around individual people, also to do stolen document checks with a variety of watch lists around the world. And that kind of begins the story, because with mobile, we all understand that we're able to capture a very large number of people very efficiently, very conveniently for them as the end customer of the process. And what we're building up effectively is a kind of a profile of functions, starting with the user interface, then doing the checks on the inputs of the data to make sure that we can trust the data that's put in, then checking the data itself, and also checking with the issuer in terms of things like the signatures on chip data. But we can also extend that by using more of the integration that we have within Groupe between ID Verify and Keesing, to be able to look at documents which do not have chips in them, and where we have to work with visual information and use other techniques such as image processing, based again on white light. And then based on the same methodology, Keesing also has many integrations with proper, I would say, official technical document scanning devices. There are a number of them, manufacturers around the world, and we have integrations with several where the same concepts are in place. So the idea here is that you can capture both white light, ultraviolet, infrared, and chip-based data, and that increases the field of data and checks that you can make on a document. So in essence, putting all of these different front-end input methods together with ID Verify and Keesing's AuthentiScan technology, you have a mixture or a range of tools that you can place around how you want to interface and work with your customers. But in the end, all the back-end concepts are the same. All the potential to do checks on documents and to do checks on individual people are the same. And they all also feed into a procedure that's supported by technology and services such as expert help desks, and also GDPR-friendly data storage, which can be used as an archive in a way that allows you to do purpose-based separation of your identity data for the purpose of checking. So thinking, for example, of where you choose to store the image of an identity document, and thinking very carefully about how that fits with regulatory requirements. I can say more about that a little bit later, but I'll pass back to the presentation now.
Great, thanks, Callum. And just to summarize, so we are really put together the strengths of Keesing technology and the strengths of Groupe, builds the ID verifier, and this is a solution which just simplifies and secure identity verification, and is built for fast onboarding, strong fraud protection, and is fully regulatory compliance. And the great thing is it support both ICAO and non-ICAO documents. And behind the scenes, as Callum mentioned, the system check for liveness, clone chips, stolen documents, validate biometrics, it screens against PEP and sanction lists, and integrate. It's also able to integrate with open banking and QES, QTSP services. This was just one to summarize again. So let's go to section 3, smart compliance. Odette, let's talk about compliance. AML6, PSD3 are raising the bar. How can banks embed due diligence without adding friction to the customer experience?
Yes, thank you very much, Roland. So I think first it's useful for us to zoom out a little bit and consider actually what are we talking about when we talk about smart compliance. I think nowadays when you put the word smart before something, it implies that it has some kind of AI capability. That is not what we're talking about here. Here, when we talk about smart compliance, we talk about embedding regulatory review processes into everyday routines, enabling companies not just to survive audits, but to thrive under scrutiny. So to give a real world tangible example of how smart compliance can work, we can give the example of rules around littering. Most towns, cities have councils of municipalities that have a rule that says do not litter on the street. However, humans will be humans. Sometimes they need to throw something away, they need to dispose of something, it's uncomfortable to walk around with it, it might be dirty, so they will leave it on the street. And there are also hotspots for littering. So think, for example, about a park on a nice day. There will be people who sit down on the grass, have a nice picnic, maybe drink something, and not everyone takes their waste with them when they leave. The smart compliant measure here is to put a rubbish bin exactly within the eyesight of the person as he gets up to leave the park, and it's not an effort to throw away your rubbish into the rubbish bin. That is putting into place a measure to stimulate compliance without forcing the user to go out of their way and to take extra steps that can be uncomfortable. So when we relate this back to banks and financial service providers in implementing a KYC customer onboarding flow, it becomes a very tricky balancing act to be able to also provide this good, seamless customer experience, but to balance between the increasing sophistication of financial crime, to have to minimize the risk of potential penalties that may come from non-compliance. And as criminals are innovating, and criminals are the biggest innovators, as we know, regulation is running to catch up, and that is causing a cumulative effect of rules and burdens which fall down onto banks and financial service providers to have as their burden. This causes a higher resource strain, it makes processes more complex, and it also means higher customer acquisition costs. So I think the number is that 3 to 5% of overall compliance costs are actually due to customer onboarding processes, and something like 1 out of 10 bank employees are busy full-time with customer onboarding. So it is a very costly process. And there is the risk of backfiring. If you don't have a good process, it causes a deterrent effect in which customers will not only pull out from your service, but they will spread the word that this was a bad experience, and they will discourage their friends and acquaintances from also using your service. So it is a tricky balancing act with a high impact of negative consequence if you get it wrong. So we start to talk about the shift from KYC to KYX. And this is the intersection between KYC and UX, user experience. So it is all about what I've just said, that disturbances during the experience of becoming a customer to your service can affect the full experience of the financial service, which means that customers can drop out of the onboarding funnel or they can leave the service altogether. So to move away from that slightly and to talk about more of the concrete regulatory requirements that are underlying to these customer onboarding processes in KYC, we have the AML EU package, which has been updated this year and also last year. So there is the move from the directives, which had the minimum harmonization approach, in that member states were free to interpret them and transpose them into their national law as they wish. Now we have the maximum harmonization approach from the EU. So a single rule book, there is one interpretation of anti-money laundering law that is applicable to all member states. On the left, you see sort of the broad principles of identification and verification under the AML rules. And we are sort of limiting the scope here, I would say, to natural persons rather than legal persons for the purpose of this presentation. And it starts with the customer identification, with mandatory information being needed, the identity being verified on the basis of certain sources, official documents, understanding the purpose and the nature of the relationship, but also throughout the course of the relationship with the ongoing monitoring, making sure information is updated, and of course, the good document and record keeping practices. What are the new developments that the AML regulation has brought us earlier this year? Well, it's the establishment of the Anti-Money Laundering Authority based in Frankfurt. It has direct and indirect supervisory powers over the expanded list of obliged entities. So obliged entities are no longer the traditional financial service providers such as banks and others, but also crypto asset service providers, traders of high value goods like jewelry, art, real estate. Football agents are an obliged entity because I suppose footballers are a high value good. And there are enhanced reporting obligations. So there is a move from not only suspicious activity reports being mandatory, the SARS, but also unusual transaction reports now being mandatory. Also, there is a uniform definition of a UBO, which can now be used across the EU for all member states. An interesting aspect of this AML package within the EU is the regulation and rules around electronic identity. So we already had the eIDAS regulation, which established the legal reliability of electronic IDs and also identified the trusted service providers throughout the member states, the qualified certificate authorities, so to speak. There were also the draft regulatory technical standards, which they set out the detailed requirements for the digital and electronic ID verification. A really interesting document is the one by the European Banking Authority, which has published the guidelines on the use of remote customer onboarding solutions. What they do is they ensure that the remote onboarding is safe and effective by defining remote verification channels, such as live video and document checks. They also talk about technical security measures that need to be put into place. What must you do to guard against fraud? And also, of course, always assure data security. These standards, guidelines, and also much of the content that was on the previous slide come into full effect and are fully applicable from the 10th July 2027. So on the 10th July 2027, financial service providers and obliged entities must be ready to comply with these measures for new customers. When it comes to your existing customers, there is a grace period which is being discussed, and I think the current proposal for that grace period is 5 years. There are, of course, challenges, as ever, that come to this initiative, and that is that, for example, not all EU citizens have the same level of access to EIDs, or different member states implement EID schemes in different ways, causing issues with recognition, trust, technical compatibility. So it's a work in progress.
Great.
Moving on slightly towards the payment side of things, so away from the AML. Currently, we have PSD2, the second Payment Services Directive, which is enforced throughout the EU. The EU is proposing to consolidate the payment and e-money frameworks with a new third Payment Services Directive and also the PSR, which is the Payment Services Regulation. I think they've described this as an evolution, not a revolution. So they're very keen on building on the existing framework and making payment services more accessible throughout the EU to all. The PSD3 is covering more of the licensing and supervision topics, whereas the PSR is where they talk about the strong customer authentication measures, the SCA, and for example, the mandatory checks between the IBAN and payee name matching is a big part of that proposal to strengthen security. So right now, that's only mandatory for instant payments. This proposal would make it mandatory for all payments. In this context, they also propose to shift fraud risk liability more strongly onto the payment service providers. And it's interesting because the European Council, I think it was, released a statement saying that authorized push payment, APP fraud, or spoofing is a growing area of concern, which I think is interesting because this type of fraud has been around for years. But it's encouraging that the EU is now recognizing it for the high risk that it is. So they have a real forward-looking approach here in that they want to guard against this risk more strongly. To that end, they give more data sharing powers to PSPs. So for example, using contextual and behavioral data like time, location, device information, in order to give them more tools to guard against fraud. However, yeah, more knowledge, more responsibility. So with the increased data sharing powers, there's also the increased liability. If we quickly compare strong customer authentication with KYC, well, they are complementary, but they are not working exactly towards the same purpose. So strong customer authentication is really about preventing fraud by ensuring that the person making the payment is the legitimate account holder, whereas KYC goes a level deeper, and its purpose is to verify who the customer actually is and what is their risk profile. So the new PSD package, it will not replace the full CDD obligations that are given by the AML legislation, and those KYC identity verification rules within the AML package will remain applicable.
Great. Thank you, Odette. Before we move, I can see we have two questions, one from Karine Brun and one from Jan-Peter Matthiesen. Let's start with the first one from Karine Brun, and it's more to you, Callum. I will just read the question. The checks for non-ICAO documents, can those be made bespoke to a customer which, in order to check a specific document for specific local security features?
I'm not sure whether it's a technical question masquerading as a policy one or the other way around. I think the short answer is that security elements within documents are understood and interpreted by experts who then translate that into two types of verification. So the way that we see it within Keesing, for example, and also within IN Group is you have the concept of reference information, which we represent by our document checker product. And you can choose within that product and that service exactly what you want to check. And we also provide hints and pushes of information where there are features that are more important to check, but you can move those around in terms of your own preferred configuration. In an automated context, the image processing techniques that are used for analyzing documents look at almost everything that can be classified as a security feature within a document and deliver a result which will tell you if a specific feature has been compromised or fails to meet with the reference criteria. So trying to superimpose the concept of a bespoke customer concept there then becomes a little bit counterproductive, I think, in some ways. In the automated sense, because the process of automation requires training and it's complicated, has lots of expertise hard coded into it. It is possible, however, to supplement that, and I think this falls nicely into the smarter onboarding category that we've talked a bit about already, which is to say sometimes things change. So let's give you an example. A document which you know is 10 years old. By definition, after 10 years, some features will be compromised. Fraudsters, as Odette say, are very, very good at their game, and some of them are very well resourced. So you might look at a hologram, which was good 10 years ago, but now is easy to fake. So you need to know whether that applies to the document you're looking at. In other words, is the service you're using or the tooling you're using able to give you some guidance or steerage or point you in the right direction to check that document in a different way? And that is something that we can certainly do within Keesing. It doesn't really apply to the RFID or the chip side of the discussion, because once you're in the chip, you're in a digital world, and it has a different set of rules to play by.
Yeah. Great, thank you. And we have another question from Jan-Peter Matthiesen. What's the benchmark versus competition with IN Group Keesing solution looking at AML and eIDAS 2.0?
If that's a question for me, and I guess certainly part of it is, I think even you, Roland, might like to offer some thoughts on that. But I think there are a number of features here which are important to consider. If it's eIDAS 2.0, then we have to be considering things as a service end to end. Which, for example, immediately rules out some providers because they are not running their services or all of their components for identity verification in an environment that can, by definition, be trusted as a trusted eIDAS level of confidence or assurance. Then you might think of benchmarks in terms of performance, and in the end, our view is that performance is to be measured end to end. So you're looking at the balance between false acceptance and false rejection, just as you would be with biometric technologies, and you're asking the question, how many onboarding customers can I push through my ID verify type of intake, where the customer is doing most of the work happily under their own steam, using their own devices, using a secure remote solution? How many customers can I safely push through that level of the solution? And if there is a percentage which cannot be processed using that technology, that technique, because of the document they may have difficulties with face biometrics, then there needs to be a natural, smarter flow to an alternative technology and solution which is baked into the same integrated platform. You shouldn't have to stop, alienate the customer, and then move somewhere else to a totally different type of procedure. So the benchmark there is more to do with how well you join together the different intake flows and the different ways of processing your customer. Becomes a very qualitative type of discussion when you get to that, because the benchmark could actually translate as, what's it going to cost me to invest and run the total onboarding solution for all my customers in the next 5 years? Mobile will give you a nice cost model for maybe 85% of your customers possibly, but your 15% becomes an unknown there. So our approach is really to say, benchmark the total solution end to end, because you cannot solve everything with a single technology.
Yeah. No, and I agree. I mean, I see Groupe Keesing offers strong AML compliance and is well aligned with eIDAS 2.0 to really secure document verification, potential EU DE-wide integration. And compared to competitors, we stand out for our hybrid trust model, combining banking-grade assurance with document-centric identity proving. And if we can go in much more detail, if there are more questions, or if we after the meeting, or someone would like to have a meeting with us, because then we can go to our AML strengths, our eIDAS alignment, and what are the differentiators. But let's go to the pool. And yeah, we will start with take a moment to really look at the forces shaping the customer journey in digital identity and financial services. Odette, will you?
Yeah. So please feel free to continue voting. I'm also keeping an eye out on the responses, because I think this is a very interesting question. Who drives the customer onboarding journey ultimately between the financial institutions, regulators, tech developments, and customers as our possible actors? The answer is that there is no one actor that drives the customer onboarding journey completely. They all play a role. They all have different ways of influencing this journey and moving it forward. If we look specifically at each one, well, with financial institutions and banks, it is mainly the drive to reduce the customer acquisition costs, to provide that better experience. And in so doing, it creates almost a race between service providers and banks to gain that customer attention and to give the best experience. If we look at regulators, then maybe it's a little bit obvious, but regulators also drive the journey. Without the regulation, there would be no customer onboarding journey need, let's say. And also the two are interlinked, because it is very difficult to improve the KYC flow without also improving the regulatory framework underpinning it. So they interlink to some extent, one to another. When we talk about tech, tech is the vehicle with which we are able to provide these options to our customers. Tech and regulation are interlinked in some way, in that regulators will try to regulate tech. We see that with the AI developments and the AI Act within the EU, that is the case. And also bad tech causes strained regulatory systems. So think about, for example, high false positive rates or siloed data. All of these actors work together and link to each other in some way. Customers are, I would say, they experience the real intersection of these three actors together, and so they would be the main driving force, would be the conclusion that I would reach for that customer onboarding journey. So here you see two quotes which are actually taken from financial services providers within the context of a study for a white paper. And I can provide the reference later if anyone is interested. But the first quote is about why would a customer start a relationship with a financial service provider? Well, it's for practical reasons because they want to transfer money or they want to apply for a loan. In this case, they would expect that customer onboarding process to be quick and for the onboarding to happen instantly. And what's also important to mention here is this concept of procedural fairness when it comes to asking someone to do something, so putting a compliance measure onto your customers. Procedural fairness is the biggest influencer of the likelihood as to whether a user is going to move forward with that compliance measure or not. Because when they perceive something as being fair and having a good reason behind it, they are much more likely to go through with the flow. So it is important to communicate transparently about your customer onboarding journey, to give the clear indications on the next steps, to set the customer's expectations and to let them know what is going to happen, what information is going to be requested from them, what documents are they going to be asked to upload. And this helps give them a realistic estimate of the entire flow and also does not create any unnecessary expectations. Then the second quote.
Yeah, sorry, continue.
Oh, sorry. Then the second quote is about who are the customers and how is that evolving in today's world. So younger generations are joining the financial services and banking world, so to speak. And we live in an instant world where our attention spans are short. So these generations, they expect the opening of a bank account to be as simple and fast as the opening of a social media account. Nowadays, almost all services have moved to or are moving to mobile. So people expect to be able to do their banking in the metro or at the gym, being careful, of course, that no one's looking over your shoulder. So with these customer expectations in mind, maybe to conclude the point here a little bit, this is why using smart compliance principles and recognizing the customer as maybe one of the main drivers of the journey, giving that good KYX and really holding the user experience in the forefront enables banks, financial service providers, obliged entities to leverage identity verification to their advantage and really find that balance that we spoke about at the beginning that's so difficult maybe to achieve.
Thanks so much, Odette. And I think it's why digital identity must be designed not just for compliance, but for experience. And so as we explore strategic teams today, let's keep this in front of the mind. The customer journey begins before identity, and it's shaped by how fast, simple, and secure that first step feels. And I think this is very important. So great. Let's go to the next, to the panel discussion. And before we deep dive into our three key questions, I would like to set the scene because digital identity is not longer just a technical layer. It's a strategic engine. It drives how banks onboard customers, manage risk, and earn trust in digital regulated world. The questions ahead reflect everyday's trade-offs: frictionless onboarding versus compliance, exception handling versus retention, biometrics versus privacy. And this tension shapes product design, compliance frameworks, and customer journey, where innovation meets regulation. So let's now explore three strategic themes: customer engagement, operational balance, and Europe's evolving trust infrastructure. So if we're coming to the first topic, strengthening loyalty and credit decision through verified identity. One of the most powerful shifts we are seeing is how verified identity data is being used not just for compliance, but to drive business outcomes when onboarding is smooth and identity data is reliable. Banks can personalize services, build loyalty, and even accelerate credit decision. So my question to Callum, how are you seeing banks use verified identity data to enhance customer relationships and streamline credit workflows?
I think since the beginning, we've seen a lot of interest in banks who, for example, start the process by looking at your proof of identity, and of course that is the classic Keesing business proposition, that you verify the document, you verify the authenticity of the authority in the document, and therefore you extract the data and you start to build that into your business process in various different ways. At that point, you enter into a separation of life cycles, I think, immediately, and we've seen, for example, within our customer base, that the time you check the document triggers a subsequent life cycle, which is about updating whether that document is still valid, updating whether that document has been stolen, because if a document has been stolen, it could be used as a proof to duplicate that identity in a false way. So that's a set of functions that banks also have to be aware of, or indeed anyone who has an invested interest in these types of KYC procedures, that documents, you can verify them once and the data that comes from them seems to be fixed, even if you're happy with the verification, but this is not the case, because data can be replicated in a false way. It can be attributed to the wrong person. And another aspect of data which has been taken and then reused in different ways, of course, is to look at people's personal and financial risks. So that data is going into credit risk processes, of course. It's also going into a number of fraud service checks, which are more localized. So they tend to be in specific countries where people's identities are associated, possibly also their documents, with something that could be of significant risk to a financial or a lending organization, reputationally as well as from a regulatory perspective. And then, of course, there are more rigid lists like sanctions checks, which our customers support on a different life cycle than the original identity onboarding. So what I find very interesting about the way that the entire end-to-end architecture is getting smarter today, and it ties in very nicely with some of the points that Odette was making around strong customer authentication versus KYC, is I think we will see more of these processes in a sense merging together, because KYC is like a dog. It's not just for Christmas. You have to look after it as something that has a legacy, and if you neglect it, the data you get from it becomes less trustworthy over time and less valuable over time. So you really have to nurture your data in some ways. And I think we'll see more of that, and even we can think of that in terms of things like step-up authentication. So working in a way that says, okay, we don't want to create friction at the beginning of the journey because it has a very negative business outcome. But at some point, there will be friction. I think that's just how it is with identity checking. If you want something valuable back, you must put something effortful in. The question is applying that at the right point in time and making the judgment based on the right type of fraud analysis. So that then becomes the deployment of the different functionality across the identity onboarding process, whether to get things started quickly and mobile, whether to treat more complicated customers or more complicated high-value transactions or events with a different set of tools, and focusing well on the problem that you're trying to solve with the right tool, the right people, and of course the right decision maker, because the decision maker for fraud now in these AML type organizations, as Odette said, are now becoming increasingly responsible for the decision, and the service provider has to take the consequences if it goes wrong. So in general, I would say the value, the validity, the verifiability, and the usability of data is getting greater. And then coda to that point, I think, is as we see digital wallets coming into the discussion, there will be more forms of verifiable credentials. I know it's an industry term, but it fits nicely with the question. That is to say, there will be more verifiable information about you associated to your provable identity that can be used in a constructive business way, very possibly fitting nicely with the PSD, in the way that you can take identity data portably between service providers in a trustworthy way. already possible within PSD, but wallets can potentially amp that up quite significantly.
Thanks, Callum. And talking about balancing security, compliance, and user experience, which also have been already covered deeply by Odette, I have an additional question, because banks today are navigating a complex balancing act. On one side, rising fraud threats and regulatory pressure. On the other, customer expectation for fast, frictionless digital journeys. Getting this balance right is critical, not just for compliance, but for trust and retention. So my question, Callum, what design principle or technologies are helping banks deliver secure, compliant, and user-friendly onboarding experience?
In a sense, that's been the topic of the whole presentation and discussion today. I mean, I think mobile has been the biggest game changer, of course, in the last 5 years. It's not a standalone solution in the sense that the fraud attacks and the risks around mobile have also started to build and gain momentum in that particular space. So the technology has to maintain its strength there, while at the same time minimizing its friction to the user. And I think the increasing prevalence of chip-based documents will make that easier and easier as time goes by, and therefore the sticky loyalty aspects then become how to work with customers who cannot fit into that sort of classic mobile digital chip-based model, and it's still a significant percentage today. So it becomes an opportunity for banks to explain what is the package, what do you get if you cannot fit into this mobile digital banking world. How are we going to help you to be a valued customer and to get the most out of your own customer experience with our organization? And that indicates, and there are signs around the world in a variety of places where there are still very important customer facing functions, where customers can go in and onboard themselves in a face-to-face way, which gives them the confidence. It also gives them the type of customer experience they want, because not all customers want this remote experience either. It's there's still a question of customer choice in this domain. And then I think finally, that will roll over as an experience in terms of services, technical services, which really improve the user experience while maintaining all of the compliance and security requirements into this concept of the wallet, because the wallet is a game changer, I think, for banks or financial services organizations who invest a lot of effort into onboarding, understand biographically what someone's footprint is over time. Therefore, they're not just talking about a static snapshot of an identity, but they're saying this is a living identity who within our domain transacts, does things, acts in a trustworthy way, etc. It's a web of trust type of concept. That type of trust can be rolled over into wallet-like credentials, which can be leveraged by other organizations, which means that banks potentially, as a result of their own efforts and their own adoption of technology and new next generation technology, will be in a position to sell that as a customer attractive service, either as an add-on or value added. It's about what we do for you as well as what you do for yourself. And that I think is a potential change of direction for some banks. We've already seen some banks, for example, Lloyds in the UK, which started to create its own concept of a digital ID wallet, primarily for internal consumption, because they have onboarding for so many different products. They decided they actually needed an internal wallet that would work as a transitive or a usable onboarding method for all their different services. So I could easily see that happening with the banking regulations becoming possible to move between banks, and then from there, more people will very possibly go to their banks to get a useful digital credential. Not talking about a government ID as such, talking about tied to your identity, possibly even in a pseudonymized way, information that could be useful about something you want to do. So it could be, for example, your trustworthiness in a financial transaction. It could be a KYB. Going back to Odette's point, it could be about a legal person and moving into that domain away from the natural person domain. And these could all branch for banks as something they can add to their service provisions to their customers. So giving their customers identity management effectively as part of the service, not something they consume, but something they produce.
Thank you so much, Callum. And maybe a follow-up question to Odette. From a regulatory standpoint, where do you see the biggest tension between security and usability, and how can banks resolve it?
I think the biggest tension, as I would see it, would be, are banks keeping up with the technological developments? So I mentioned before that outdated tech can cause high friction in certain processes, such as that high rate of false positives, data not being used the most efficiently, uh, automation not being deployed in the correct way. So coming back to the point of those three actors plus the customer, the tension would be that the three actors do not leverage each other in the best way. So it's a shared responsibility, as I would see it.
Okay, great. And to the last point before we go to the Q&A, we are talking about the bank's role in the EU wallet ecosystem. With the European Digital Identity Wallet initiative gaining momentum, banks are being called to play a foundational role, whether as issuer, verifier, or relying party. This isn't just a regulatory shift, it's a chance to shape the future of cross-border trust. And my question to Callum, what role do you believe banks should play in the EUDE wallet ecosystem?
I'm really glad you used the word ecosystem there, Roland. I think the minute of talking to customers that we have, and even talking to friends, and people say, "Oh, the wallet, yeah, well, I'm fine. I've got a wallet in my iPhone, or I've got the Google Wallet on my Android phone." I said the deal is done. There's nothing more to do. And I said, no, you're really honestly missing the key thing, or where the value points are within the ecosystem. Where I believe banks can really act creatively is to be issuers of credentials, because a wallet can have as many credentials as you like, and also the wallet concept is designed around the concept of having pseudonymized identities, so you don't necessarily have to operate a wallet which in a sense identifies you or connects you with a global domain. It can be a very specific domain, banking, or even the single bank, or the purpose of banking. These things can be agreed by convention, but more importantly, the idea of being able to share in a trustworthy way lots of useful information about someone. Coming back to your question about verifiable information about customers, they're the potential vehicle for that put customers in control, because wallets, of course, are all about the ID holder and the control of the ID holder over their own data. So that, I think, is the entry point for banks to, as I've said before, really leverage a new value case. Having gone through all the pain and the hassle of consuming and being a relying party who consume and verify credentials for their own purpose. So I think they go from being a relying party effectively to becoming a relying party plus an issuer, and possibly an issuer of new creative credentials.
Thanks so much, Callum. So let's go to the Q&A. Let's see if we have questions. I mean, if we don't have right now any question, we can still get some in writing. I mean, and we have around a few minutes left. So let's see if we get some additional question. If not, then I want to say thank you to you, Odette and Callum, for a really truly insightful conversation. Today's discussion really reinforced that digital identity verification is not longer just a compliance checkbox, it's a catalyst for trust, agility, and strategic growth. And to everyone who joined us, whether you are driving product innovation, navigating compliance, managing risk, or simply passionate about shaping the future of digital identity, we hope you are leaving with fresh perspective and actionable ideas. If you have further questions, or if you are interested in exploring how our solution can support your journey, feel free to reach out, contact with us, get in connect with us on LinkedIn, or drop us an email to set up a conversation. And just let's reframe IDV not as a regulatory hurdle, but as a cornerstones of seamless customer experience and resilient relationship. So thanks again for being part of today's session, and stay safe, stay curious, and we look forward to continuing the dialogue. Thanks a lot.
Thanks for joining.
Yes, thanks very much.
Thank you.